This stock could be the next Palantir. It's a stock that you've never even thought of as potentially being, the next Palantir. It's a stock that's hated very much. People have a bad memory about the company. It was very hated in 2021 and in 2022, but it's a very different company. And whenever I talk about this one, they say, yeah, whatever, and they shrug it off. Kind of whenever I was talking about HIMS at $7 and $10 per share on YouTube, and this is when I started buying the stock, and I bought a little bit more later on, and I increased my position over time. But I do know a few things about those growth stocks, and HIMS was the only pretty much publicly shared growth stocks that I own that I shared on YouTube. And this is gonna be the second one. And I did buy the stock in this previous pullback in April, and I believe the stock is still undervalued, and I believe the growth story is only getting started. So I'm going to talk about it here, and I believe you're going to enjoy it very much. If you do enjoy it, please press the like button and let me know what you think in the comments. Now, before I get started with the stock, I know many of you guys are going to skip the video just whenever you see the name. I mean, this is how much this name is really hated, but I encourage you to watch the full video and not have any regrets in case this stock ends up becoming, the next Palantir or pulling up a Palantir-like move. And I believe this has a very high likelihood of happening. So just watch the video and then judge me at the end. That's what I would recommend. And this stock is Robinhood. And I'm not talking just about a technical pattern, which is what most of those stocks go through whenever they go public, and then they start going down, and then they form like a cup and handle, and then they start going up from there. Most of those stocks kind of play out the same way. And this is kind of how Palantir played out from $20 per share, now sitting at $120 per share. Many people skipped it because it went up from $5 to $20. And many people are skipping Robinhood right now because it went from $12 to $14. And I believe this is a major mistake from many investors. Robinhood is still up on the year around 19%. And again, there's this obsession in the market with buying whatever is beaten down. So people believe if they're buying a stock that's beaten down 50%, they're getting a discount. But if they buy a stock that's still somewhat up, they're getting ripped off. But it's not much about the price, it's about the fundamentals. Like Robinhood, as of this quarter, they grew revenues 50% and earnings 100%. And they've been growing earnings 100% for many quarters. So it really warrants the strength that you're seeing in the stock. So the stock is strong not because it's overhyped, but because it's actually delivering results while other companies aren't delivering as good of results as Robinhood is, delivering. And if we look at the company, it's a very different company from what it was back in 2022. And they have over 25.8 million funded customers, 25 million. It increased 1.9 million year on year and 620,000 quarter on quarter. This is insane kind of scale. Imagine having access to 25.8 million people interacting on your platform, funded customers, not just any customers, but funded customers. So if you come up with a new product, you don't have to spend millions and hundreds of millions on advertising. You can advertising to your current 25.8 million funded customers. And the scale and the cross-selling opportunity here is massive for Robinhood. And there's so many new products they are launching, and they're going to require little to no advertising, in my opinion. The product is even advertising itself for how good the product is. And people are sharing them on social media, and I'm doing many different things. And I've seen it many times before. And I'm just shocked because I used to be a Robinhood hater. I used to believe the company was bad and they want retail to trade for the short term and all these kind of things. But I'm seeing what the company is becoming, and I'm just absolutely shocked. If we look at the total platform assets, they increased 70% year on year to $221 billion. This is still relatively small compared to other brokerages and other kind of financial institutions, which have trillions and trillions of dollars under, you could say, assets or platform assets in general. So the company has a long way to go, but they did grow 70% year on year and 14% quarter on quarter, which is amazing. Now, despite this major pullback, equity volumes, they were still up 84% year on year. They were down 2% on the quarter. Option contracts, they were up 46% year on year, and they were actually up 5% quarter on quarter. Crypto has absolutely tanked. It was still up 28% year on year, but it has tanked 35% quarter on quarter. And one reason why I kind of like the Robinhood exposure is because I get access to crypto, and I don't really like Bitcoin. I don't like holding cryptocurrencies, but I'm kind of playing cryptocurrencies if I'm owning Robinhood. If they do succeed, Robinhood will also succeed in terms of their crypto volumes. So it's a good indirect way to get a exposure to crypto. Now, the main thing with Robinhood, and yes, revenue did increase 50%, but the main problem I would say with Robinhood is that most of their revenues are still coming from transaction-based revenues. Over 583 million out of the 927 came from transaction-based revenues, which means you need a lot of activity, which means you need some kind of a bull market for the stock to succeed. And this is the perception that people have, and this is the perception that I had, is whenever the market goes down, whenever the market tanks, all the Robinhood investors are gonna give up, and this is when the stocks is pretty much done. But this is not the case, and I'm gonna talk about this. But if we look a little bit deeper on a transaction volume, 56 million, only 56 million comes from equities. Now, options, they make up 240 million, which they were actually up on the quarter because many people buy put options, they trade the market, which is good. And 252 million comes from crypto, which was a little bit down quarter on quarter, but this is still elevated. And I would say crypto is the most speculative of them all for in terms of revenues for Robinhood. And you really need some kind of a bull market to maintain such crypto revenue growth. But again, the main perception that people have is if we have another bear market like 2022, Robinhood is gonna get killed. And this is clearly not the case. And this is what the CEO said. He said, unlike where the business was back in 2022, where we were predominantly focused on novice investors, the new focus on being the best platform for active traders has made us more resilient in times like these, because we used to just not have a lot of the mechanisms for customers that were more sophisticated, that wanted to trade sideways or declining markets. But just recently, we've launched futures, and as of April, there's over 4.5 million contracts traded. So this is a very different company from what it was in 2022 when they had just dumb retail investors just trading crypto and trading options and all these kind of things, and they give up when the market goes down 5%. This is not the case. We have much more education on YouTube and other places. Many retail investors are actually buying the dip, but a lot of the traders have joined Robinhood on the Robinhood Legend, which is another trading platform within Robinhood, and they're trading futures contracts, they're trading options, they're trading downsides and down markets, and they love Robinhood. So Robinhood is much more resilient than what it was back in 2022. So making the 2022 comparison isn't fair in my opinion. Of course, it's going to affect the stock. Of course, Robinhood will do better if the market's going higher. But if the market does continue going lower, Robinhood isn't going to do as bad as many of you are expecting. But Robinhood knows this, and they are diversifying their revenues to many different revenue streams. They have over 9 revenue streams right now. One of the most, or the fastest growing one, is Robinhood Gold, which is like a subscription you pay within Robinhood. They have almost 3.2 million people, and the growth has actually been accelerating. It's up 1.5 million people year on year, or 550,000 people quarter on quarter, and this is generating an annual revenue run rate of around 152 million, which is pretty amazing. And if you do sign up for Robinhood Gold, you get a 4% APY on uninvested cash. You get 2.5 million in FDIC insurance, a 3% IRA match. You get some kind of lower, commissions on future contracts and some kind of options and all these kind of things. That's pretty good. You get some kind of professional research and better market data. And you get many different things within Robinhood by having the Gold subscription. Another thing you get is if you do sign up for the Robinhood Gold card and you have a Gold subscription, you get a 3% cash back across the board. There's no credit card in the United States that gives you 3% unlimited cash back. The highest one, I believe, is Citi Double Cash, which gives you 2% cash back. This one is a 3% unlimited cashback. I believe no foreign transaction fees, amazing kind of platform, and it's still just rolling out. Like it has started to roll out over the last few weeks, and it's gonna be another game changer for Robinhood. And you can get those cashback immediately, transfer them to Robinhood, and reinvest your money. So this is just beautiful. I mean, it's really brilliant, and you could look from the innovation of the management team, how fast they are diversifying the business away from just crypto trading and options trading. Another rapidly growing segment of Robinhood is actually the Robinhood IRA kind of investments, and they grew over 3x since Q1 of 2024. They are rapidly growing. And in terms of total retirement accounts, they have 1.3 million retirement accounts, and they have the 3% IRA match, which is an incentive for people to join. And once they join, they tend to stay within the Robinhood ecosystem, and they cross-sell them many different things. Now, the beautiful thing about the IRA, it's more of a recurring revenue because people, they don't really try to time the market and do all these things and trade crypto. Most of them, they just dollar cost average into an index fund or something close to that. And that brings Robinhood more, could say recurring, predictable, more resilient, revenue sources, which is amazing for the company. Robinhood is also expanding into sports betting. I mean, this is insane. They have 25.8 million people. Many people that do gamble on options, they also gamble on sports. And they're rolling it out. It's not fully rolled out yet, but it's rolling out within a few states. And this is, again, very brilliant. And this is massive. I mean, just look at DraftKings, look at those kind of stocks, look at the market cap of those stocks, and compare that to Robinhood with the scale of Robinhood and them having access to 25.8 million people, having the name, having the platform, all within one. Most of the people that gamble on stocks, they maybe gamble on something like sports betting and all these kind of things, and even event contracts where you could bet if the Fed's gonna hike interest rates or cut interest rates, and many different kind of bets, which are becoming more and more popular in the United States, with over 58% of the US population having exposure to stocks. So this is like, the platform of the future, and many people are just shrugging it off like, yeah, whatever. And all those young people, they're all on Robinhood. They're not on interactive brokers, which what I'm on. They find it too complicated, They're not on Fidelities. They're not on Schwab. They find them like ugly. They're all on Robinhood because it's easy to use. And once you're on Robinhood, it's hard to go from Robinhood to my broker, which is interactive broker, or go to some other broker. And it's very hard for most people to do. So there's a lot of stickiness in the platform. But they also have many different things. One of them, which is launching out, is Robinhood Banking, which is mainly going to target a lot of the institutional investors and high net worth individuals that want some kind of a private banking experience where within 1 or 2 clicks, you sign up and you just have a checking account and a saving account, and you even have a button you press and some kind of Uber driver goes to the ATM or something and he brings you cash to your door. So if you want $500 in cash and you don't want to go to the ATM, no one's doing this. The driver comes to your house and he gives you the $500 in cash from the comfort of your house for private banking. So this is insane, game changer for the company. And imagine the TAM, the total addressable market for private banking, from Robinhood just taking market share from KeyBank and taking market share from the regional banks and all those things, all going online. No, you don't want to have to go talk to a private banker in a little office. This is all gone. I mean, this is insane. And in the future, in terms of market share here, is going to be amazing. Something else they're targeting, this is insane from the company, is mainly a lot of managed accounts, and you could say the advisory businesses. So many people have a financial advisor, you go talk to them, all those things, that they make a plan for you. And many people don't want to do that. They just want to do something online. Well, you go on Robinhood, there's some kind of an advisor that you just select what you want. You want more growth, you want more safety, more defensives, more kind of aggressive strategies, and whatever you want. They give it to you in one platform, okay? And you could choose to adjust it. So you could adjust your stock if you want it to be a little bit more of a percentage of the portfolio, a little bit more defensive. You could look at this video from 5% to 50%. So you could do pretty much whatever you want, or you could let them manage it for you. And the maximum fee for this management is $250. So most of the financial advisory businesses and funds and other things, they collect a flat fee, and this fee goes up in dollar value as the value of your investments go up. But this is not the same thing with Robinhood. With Robinhood, no matter how much your investments grow in value, they're only going to charge you $250. And people find it very interactive, very easy to do. And for a lot of younger investors that don't want to bother picking stocks, they just sign up for Robinhood strategies and they invest the money for them, which is again very brilliant. And this is, I believe, $1 trillion industry on its own in terms of funds and advisory businesses and financial advisors and all that kind of stuff. And it's gonna be ultimately high margin, recurring revenue business model for Robinhood. So you could see the disruption over here. You could see the innovation. You could see how aggressive the management team is and the team of Robinhood is to innovate, do something outside of conventional thinking. And all those platforms, they've been copying Robinhood. They're copying the options platform of Robinhood. They're copying, how Robinhood started with commission-free, now 24-hour market. Robinhood is always first, and they are copying Robinhood. So the TAM here, through many different things, the gold cards, 3% cash back, people sign up to 3%. If they don't even want to invest in Robinhood, they just want to get the cash back, and then they might actually like the strategies for their retirement account. And this is a cross-selling opportunity. So this is what I'm talking about. I mean, the TAM, it's just going to be insane. And what has really surprised me from the management team is how transparent they are in terms of stock-based compensation. So they share, you could say the stock-based compensation expense on a graph on their presentation every single quarter, and they're proud that it has actually been declining. So this is not something that a lot of companies do. They tend to hide it a little bit, but here they're actually being transparent. And if you look at the share count, for such growth, for a company that's growing 100% in revenues, 50% in earnings per share, you would expect them to be declining, or actually you should expect them to be diluting stock. This is clearly not the case. And shares outstanding have actually gone down 0.5%, and they expect it to go down 1% in 2025 as the company is lowering stock-based compensation expense as a percentage of revenues, but they're also buying back a lot of stock. So this is the killer for growth stocks is stock-based compensation and share dilution. You don't have it with Robinhood. So the value per share creation here is going to be insane. Now, if you look again at the last quarter, in my opinion, it was a very good quarter. GAAP net income grew 114%. Year on year, very rapid growth in total for Robinhood, and it's been pretty amazing. Now, if we look at the PE ratio of the stock, it's trading around 34 times forward earnings. Now, 34 times forward earning might sound expensive, but if I look at what's priced in those earnings, the analysts, they are pricing in Robinhood to decline in earnings per share 21% this year relative to 2024. Now, 2024 was a record year where the company grew in earnings per share 280%. But so far, as of Q1, the company has been destroying the estimates, and they said that so far in April, momentum has even been picking up on a lot of the future contracts, sports betting, and many different things. So they have a decent chance of beating the declining 21% in estimates. It could even be declining 5 or 6% in total for 2025, which means the PE ratio that's at 34 might end up actually being at 25 or 26 or 27. So I believe, it's not really going to end up being 34, most likely maybe 25, because there's a very high likelihood that Robinhood isn't going to decline 21% in earnings per share, and they might be flat, even grow in earnings per share in 2025. But if you look at it in total, in terms of how rapidly the company has been growing earnings per share, over 100%, and you're buying the stock at 34 times earnings, for 100% earnings per share growth, this is really cheap. This is really not expensive at all. And I believe earnings per share will likely keep growing 20% a year for the next 10 years minimum. And many of you may disagree with me, but I'm seeing it in real time. I'm seeing Robinhood grow 50% of revenues, which is translating to 100% in earnings per share growth. When I look at sports betting, when I look at Robinhood strategies, when I look at the gold card, when I look at futures, when I look at the international expansion and crypto trading expansion in Europe, when I look at all those things, the growth is going to be insane. So I'm at least Robinhood is going to grow in earnings per share 20% a year for the next 10 years beyond 2025. I believe this is an easy bet, and I believe that's pretty much what I'm personally betting on. Now, if I go to my model, this is all I did, is I got this year's earnings per share, which I did take it at face value from the estimates that, okay, they're going to decline 21%. This is $1.46 in earnings per share. So I put in $1.46 for the next 10 years and 20% a year in earnings per share growth. Again, I'm going to get, comments that this is too optimistic, but I don't think it's optimistic. If you really understand the TAM here in the advisory business, in the sports betting business, 20% a year is going to be nothing. It's going to be easy, in my opinion, for a company like Robinhood. Okay. Now, if I run those numbers, I get $9.04 in earnings per share 10 years from now, which is amazing because we're not going to have little to no dilution as the company is buying back stock and maintaining stock-based compensation. So this is going to be very accurate. Now, the company right now, we talked about it, is trading at 34 times forward earnings. Okay. Now I'm going to assume that the company trades at 25 times earnings. I don't believe 25 times earnings is optimistic. I wouldn't be surprised if Robinhood trades at 40 to 50 times earnings 10 years from now. But if I want to be conservative, in case the company declines a little bit in growth and all these kind of things, which the company will likely still be growing 10 years from now, but let's say it trades at 25 times earnings, and I believe this is fair. We use 25 times earnings. This is $226 per share for Robinhood. Okay, Robinhood right now is trading around $47 per share. If I divide it by $47 per share, this is almost 380% on the upside for Robinhood over the next 10 years. And I personally believe this is conservative because I wouldn't be surprised if Robinhood grows earnings per share 25 to 30% a year for the next 10 years. And I wouldn't be surprised if it ended up trading at 30 or 40 times earnings. And if I take $9.04 and I time it by, let's say, 40 times earnings, in this case, just to play with some numbers, this is $361 per share. The stock right now is trading around $47, which in this case, it's 670% on the upside over the next 10 years with Robinhood. And again, personally, I wouldn't be surprised if it ends up being much, much higher. So I like the company very much, but I'm going to talk about a few things. The first one is what people always tell me in the comments is, yeah, but you look at the insiders have been selling. When I told people on YouTube I'm buying the stock around $32, they said, yeah, but you will be impressed if you look at the insiders, they've been dumping the stock. They've been dumping the stock since the stock was trading at $20 per share. The main reason why Robinhood insiders are dumping the stock, the main reason why Palantir insiders have been dumping the stock since it went public, since the stock was trading at $5 and $6 per share, is because of stock-based compensation. Because those tech companies, they have stock-based compensation, they're always going to be net sellers of their stock. That's just the way it is. You could look at every single company from Adobe to Palantir, Hims, SoFi, all those stocks, they did go up a lot, and insiders kept selling the stock. So it's not much about, oh, the insiders are selling, so we shouldn't buy it. You could have said the same thing at $20, and you could have said the same thing with Palantir at $6 or $7. So to me, this argument is kind of meaningless, and I'm going to talk about it later on. But what I always, tell people with growth stocks in general is, something could always go wrong because we're taking a lot of risk here. Robinhood is a risky investment and there's a lot of risk, but there's also a lot of reward. I mean, the reward here could be up to 1,000%, up to a Palantir-like move. Now, if I want to set up a good risk reward on such stocks, what I personally do is, because they are riskier, because they are a little bit more volatile, I don't bet the ranch on such stocks. I put in a small percentage of the portfolio in Robinhood, in Hims, in such stocks. Now, if I'm right on Robinhood goes up 7, 8, 9, 10 times, I'm going to make a lot of money. But if I'm set up on the right position sizing and the stock goes down 50% and Robinhood investors give up, something bad happens, and I'm wrong on the stock, then I don't lose too much. So if I'm right, let's say I put in 5% of my portfolio, the stock goes up 10 times, I'm going to make a lot of money. If I'm wrong, I'm going to lose 2.5% of my portfolio. But if I'm right, Robinhood will grow into itself. So the position sizing will take care of itself. The stock will grow without you having to risk your own money. So that's how I, look at it, because I'm speculating a lot here. Like maybe Robinhood doesn't grow 20%. Maybe it doesn't trade at 25. It's all speculation. But we have to kind of try to put in the odds on our sides. And the best way to manage it is through position sizing, which most retail investors don't really think about too much. They think only about the upside and how much they want to buy, but they don't think of what if it goes wrong, what am I gonna do then? So I believe position sizing is key. And that's just my opinion on Robinhood. If you want to know a little bit more of when I buy something, when I sell something in real time, like I did with Robinhood a few weeks ago, and it's up over 50%, I highly encourage you to check out and join my investment group. This is the link in the description. But thank you very much for watching. I'm honored. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.